My colleague is already in the studio. That was our friend, Mr. Oguriola, there now speaking to us from the United Kingdom. But thank God he's still on the same track, not leaving the track that he used to be on when he was here.
Yes,
but what is your reaction to this positive close for the week?
Not only today's closure, you've seen that for this week, the market has
Cumulatively, it's been interesting.
4 days positive trend. It was only yesterday that we were down. So Monday through Wednesday, we were positive, down yesterday and today again. So if you have a cumulative calculation, we may be taking the index of the market close to 3% for this particular week. And that is an impressive performance for the week. Today's activity is coming on the back of huge gains by this cement company, BUA. BUA Cement, you know, is not a pushover security at the exchange. Indeed, it's positioning itself every day to, you know, take fund managers' attention. And when we are moving into the dry season, this is the time that so many people embark on building projects, construction of roads. That means a season for this company to really show its strength. And we've seen that beginning to happen, and investors keying into the shares of that company. Then the banks now, we have First Bank Group and ETI. The two of them have pooled resources together with BUA Cement and moved markets at a very high level, 0.83%. That's a very good performance, you know, closing the weekend on a positive note. But the question is, what is going to be the market view or the way we are going to carry the market in the next, let's say we have just 3 weeks to end the year? A mixture of ups and downs. I think that investors' attention will stay with the banks. Yes, because they are going to close their registers according to the demand by the central bank. The entire banking industry, you know, their trading pattern must end December and then collect together. So that being the case, as the other analysts had said, we've seen that majority of them are trading below par value. And that creates opportunity for investors to key in and buy at very cheap rates. And so those who pack huge volumes of any of them now, especially the big ones, they stand a chance of you know, getting good dividend when in the first quarter we see what they had done for the entire year. Whatever is happening to a particular bank or even the industry, I think it is a function of the bad national economy that we have seen. Otherwise, each of the securities, I mean, each of the particular bank or an institution quoted a very good stock. But the economic situation, you know, is putting pressure on people, and then bad deals here and they think of the banks, you know, the loans problem. Now people, because of disaster, think of those who lost, you know, their farms through the flood. They cannot pay back loans. So all this type of thing will affect the ability of the institution to, you know, gather enough dividends package, you know, for their shareholders. Indeed, the economy is in a very stressful, and we don't even need to overemphasize that. We feel the pinch, the hunch every time, every day. But we keep going with it. Another issue pressing the market now is this political activity. It's very, very hot this Christmas time now, politics and Christmas, and with the fuel crisis. So investors have so many negatives in the basket to look, and then those of them who want to avoid a risk, they stay aloof. But speculators, they have opportunity now. You know, see, like this week now, we've had 4 days straight. Those 4 days are going to, you know, get margins on securities to a certain level. You will not be surprised if Monday, Tuesday, the market comes down for those who want to, you know, apply to take profits on their investment, and then it starts up again. So we will be marking time like that for the rest of the year, you know, to move on.
Thank you so much there, my colleague Effiong Ekop there. Do you enjoy your weekend? We'll do this again on Monday.
Yes, we do again.
All right then.